we're going to give you 3 simple pullback strategies that you can use in today's market and almost occur on a daily basis, guys. We're talking about very basic patterns that you can find on a daily basis and add to your trading repertoire. Let's get into it. 3 very simple pullback strategies. Neil's up first.
Absolutely, Brendan. Thank you so much for the intro. We're going to get right into the basics of it, and I'll show you, look, when you talk about pullback strategies, of course you can mean a stock pulling back down and then you buy it, but anyone that watches our live show knows that I like to go short sometimes too, and it works both ways. I mean, you can have a move where the stock comes back into a recent high, and then you're looking to go short. So I'm going to use that latter example here, and I'm going to start with Virgin Galactic. Now, I do want to quickly, I'm going to show you a 1-minute chart, but I just want to flip to the 15 just so that you guys can quickly see here when this one loads up that there is a significant price level that forms at about 21.60 or so, guys. So there's a couple of days in and around that range where that's going to have some significance to it. You come right back into that 1-minute chart, and this is going to be the key, because at the open, the entire trade is going to happen. Eventually, you're going to get some price moving away from this key price at 21.60 area. But at the open, you're looking to see if we're below that particular price. You have a pre-market high as well at about 20.80. So all I'm looking to see is right at 9:30 when volume comes in. Are you below that resistance level? Check. That's check 1. Have you tested it once? Okay, fine. I'm not into that short trade. We're running away from that price at 9:30 when volume comes in. This is a stock that is gapped up at the beginning of the day. So at this point, the momentum is to the upside. It has a resistance level at 21.60, which shows up on the daily chart before. We're below that price. We have a pre-market high at 20.80. I'm simply looking at 9:30 when the volume spikes in. We move up into this price. This would be your pull back. In this case, it's a pull up. And does it fail to hold through that level? Now, the rule is for me at the open, because there's a little bit less liquidity and there's some price discovery going on, you have to allow it to travel through that price. It gets about 5 to 10 cents above before immediately falling back in. Once it snaps back down and you see that there's a clean rejection, I mean, you're going to get one of these, you're going to get this tightly clustered spike up, and then you're going to get a tightly clustered candle here. You're looking for the entry in and around this 65 area right here on the chart, and that is your pullback. Your out is going to be at that high, the fresh high that it's made, and then from there, however you decide to use it, some people like to use average true range, some people might like to think about something like what is the pre-market low, or you pick a round number like 20 even. What I would usually say is take a step back, the same way that we said I like the short trade and I'm looking to play the pullback for the short because I'm below that 21.60. Let's find a support level below that price. You go the day before, and then you have this nice afternoon support. The stock bounces, makes a low, and then right in the close, we call it power hour for the last hour of the day, it gets to 19.70. So you have something like this as an ultimate target, whether or not you want to get out in stages, maybe one at the pre-market low, maybe another in front of that psychological level, that 20 even, maybe another out in front of that 19.70. All 3 of those prices, risk to reward off of your 65 area short to your about 20.88, 20.90 stop, they're all going to work out for you. But the key thing is, this particular strategy is a bit of against the grain. You're actually shorting a stock that is going to be up. It's still a pullback because it was off of those highs and then it's snapping back up. So it's still a bit of a pullback from the recent trend, but it is going against the grain. So that's one for the short side of trading. Of course, most people are looking for how can I go long when the price action is trending to the upside and then buy that kind of a pullback. I short on the show, so you know how I had to start it, Sean.
Hey, nothing wrong. Look, going both ways is very, very important. You got to have a marginable account so that you're able to hold some shorts, and some stocks won't be shortable. So good thing to have both ways, especially if you are only able to go long. So strategy number 2 here. So the first one, good strategy there. Neil just reviewed it. I'm going to call this one the pullback breakout strategy, okay? And it's very, very simple. I've zoomed in on ANVS today. Again, a huge runner, up 250%, a bunch of halts in here. But what this is called is the pullback, then the breakout strategy. What you're looking for here is when a stock is making significant either new highs, it could be a 52-week high, it could be a daily high, like I'm going to show you right here, right now. and let's go over what the pullback breakout strategy is. So here you go. This stock just motoring today, $36. I mean, we start the day 26, 36, a bunch of different halts in here, and you're stuck wondering, okay, I'm not into ANVS. How do I get in? So looking at this, we definitely have some support here at 54, right? But what we're looking for is a pullback. We don't know if it's going to hold or not. But what we see right here is we don't want to get involved at the bottom. So we're playing a different strategy. So you can see here, comes back into support, right? This is the pullback. So we make all of these highs, 63, 62, 63, 64 here. And we're making all of these highs. That is looking as clear as day as resistance. So what we do is we wait for it to pull back to support. And then the key here is, guys, taking out then this next level. So when you take out the previous resistance and you've already held support, this is the pullback, then the breakout strategy. So let's pretend now, and again, we've zoomed back out here, so we're zoomed in. I will zoom back out in a second. Let's pretend you take this long off this break right here. The risk that you have really is back into this area. So considering the move today, you're going to have to give this name about a $10 stop or so. So you take the break of 64. You know your stop is going to be somewhere around here, maybe a break of 52, something like that, even a break of 50. So you're taking a little bit of risk. But look what happens here as we now zoom the other way, right? So as we move over, you can see what happens. This is that break right here. You take that 66 break, not only do you take it, but look what happens. The halt comes right after that. So right now it's trying to discover new areas. I don't like being stuck in a halt, so I'd wish it wouldn't have halted here. But look what happens. The pullback, then the break of this level. Now those that are caught short are in trouble here. So now what do they have to do? Hence the halt, and then bang, 75. There's your $10 worth of risk already. Take out half right here. You're long 66. Take out half for that $10. Now if you fall back to 53, you're still in the money, no problem. Bang! Then you get the upside again. Here's another pullback right here, actually, Neil and Brendan. Comes back down to 70, previous support, breaks that high again, 77, and boom, you can get back in again. And now we're looking for the same kind of a trade again. So you have the pullback into support, then the break of a significant level, pull back again, break a significant level. Right here's a long, and right here's a long. ANVS just, you know, like a glove here. I mean, it plays that pullback strategy, pullback breakout strategy twice, and it could be more times here on ANVS.
Two amazingly simple but repetitive patterns that we can find in the market on a daily basis. We promised you three, so let's go. Here's number three. Everyone's heard the term VWAP, volume weighted average price. How can we then use VWAP to find pullbacks? Let me show you. We'll jump into, this is the Grayscale Ethereum product listed on the OTC markets. I just pulled up whatever was on my screen. It really doesn't matter what symbol you're looking at. It doesn't matter what time frame you're looking at. You can find these on basically any time frame. This is it's hard to see there, but this is a 10-minute chart, just so everybody knows. So red line, obviously VWAP. We have pre and post market data in here as well. I want to direct your attention to, this is what, 3 days ago. We had a bit of a choppy session for this, but notice the importance of VWAP in a couple of instances. So the initial move on the day was to the downside. Once we break back above VWAP, we're looking for somewhere to get involved to the long side. If you're now back above VWAP, you're using VWAP as a directional bias. We wait until we get this beautiful hold of VWAP, and there's a number of different ways you can play this. Understand time and sales, understand the level two. How is it trading when we start moving away from VWAP here? The long is very obvious in any of this area right here where my cursor is. You can use that wick as your low stop out. You can use those wicks down there as your low stop out. You get a nice move on the win side. Look at what happens then later in the session. Another great pullback into VWAP, buyable there, stop below VWAP, get a nice move up to almost day highs. Let's fast forward. Yesterday, we had a big move to the downside on news surrounding cryptocurrencies. If you miss this, and obviously not everyone's going to be a computer and be able to catch the initial move in any instrument, you're thinking, man, I missed that. Where can I get involved? Look what happens when we get back to VWAP. Again, consolidation around VWAP. Anywhere in this area is worth a shot on the short side. Stop above VWAP. never goes against you, gives you a nice short trade back to the downside. Just to prove how simple it is to find this, I'm just going to flip over to another symbol. I happen to have the SPY up here, which is the ETF that follows the S&P 500. And there's another bunch of examples here of this same type of trade. So going back a couple of days, again, a 10-minute chart, just VWAP on here, no other indicators. There's a pullback into VWAP, stop above. Look at the move you get into the close. Here's another one, directional move away from VWAP initially. We get the pullback. Look what's holding, VWAP as support. You get a nice move into the close. And it goes on and on. Here's another one. Here's another one. Here's another one. You can find these every single day. And trust me when I say, it does not matter what time frame of chart you're looking at. Another very simple concept that you can put to work in the market every single day, guys. There's 3 very simple pullback strategies you can start using right now. Let's go to Valeria.
Hey guys, thank you for this useful information. Dear viewers, please subscribe to this channel to see more great videos.